Hey everyone, in this video I'm going to answer which is the better dividend stock to buy, Procter & Gamble or Clorox. I'm going to compare these two on 4 metrics to answer which is the better dividend stock to buy, starting with dividend yield. So let's get right into it. Clorox offers a 2.29% dividend yield to passive income investors, which is better than the 1.84% dividend yield offered by Procter & Gamble. The next metric I wanted to compare these two on is annual revenue growth. And each of these companies had done an excellent job over the last several years in growing revenue. Although Clorox has had some difficulty coming out of the pandemic, unsurprisingly, Clorox was a huge beneficiary during the pandemic as its disinfectant wipes were sold out nearly everywhere for the first year or two during the pandemic, as everybody was wiping every surface nearly every 9 seconds or so. Now, Clorox is coming to a more normalized selling environment. Procter & Gamble, meanwhile, since 2016 has done a good job increasing revenue. Neither of these two companies is going to be a high-flying growth stock, but they've done a good job if they can grow revenue by mid-single digits or better. 5.35% revenue growth would be excellent for Procter & Gamble over the next several years. The next thing I wanted to compare these two on is the operating profit margin for the trailing 12 months. And similar story for Clorox. It was doing a good job expanding it, surpassing 20% before the economic reopening and the significant decrease in demand for its products really disrupted operations. It's not easy to go through what Clorox went through when your business is disrupted, even if it's disrupted in such a positive way where demand surges. It's still not easy to deal with that, right? Because it's a historically singular event that hasn't happened before, and so it's difficult on management. And so that's where the difficulties Clorox is having right now in adjusting downward following the huge boost it experienced. Procter & Gamble, though, doing a good job. Operating profit margin 21.7%. Very good operating profit margin for a company of its size, nearly 80 billion in annual sales, and considering it sells household products. So really impressive for Procter & Gamble. Finally, I wanted to compare these two on valuation, and I chose to use the forward price to earnings. And according to this metric, Clorox is more expensive than Procter & Gamble at a forward PE of 23.47 compared to a forward PE of 21.69 for Procter & Gamble. So given everything we looked at and given the forward-looking prospects for these two dividend stocks, if I had to pick one of them today, Procter & Gamble as my choice for the better dividend stock to buy. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.